Good morning, dear students. Welcome to the class of Accountancy. Students, today we will discuss the methods of valuation of goodwill. By using these three methods, we can calculate the value of goodwill. The first method is average profit method, the second is super profit method, and the third is capitalization method. Although we have discussed these two methods, first and second, in our previous lecture, so today we will discuss the third method, capitalization method. We will learn how to calculate goodwill by using this method. Okay, so let's start. Capitalization method. You can see that capitalization method is divided into two parts. First is capitalization of average profit and second is capitalization of super profit. Means we will calculate the value of goodwill by using either average profit method, capitalization of average profit method, and or capitalization of super profit method. Okay, dear students, now we can see that the first point is that is capitalization of average profit method. We will calculate the value of goodwill by using the capitalization of average profit method. How the goodwill is calculated in this method? In this method, the goodwill is to be calculated by reducing the actual capital from capitalized value of average profit. You can see that there is written according to this method, goodwill be excess of capitalized value of average profit. Means firstly we will have to calculate the capitalized value of our average profit, then we reduce the actual capital from that required capital. What are the things that are needed to calculate in this method? Firstly, average profit. Again and again we are calculating this method. This we are calculating the goodwill by using this method in previous average profit method also, then it used in super profit method also. So I think you are very familiar now this formula. Okay, so the other thing that is required, capitalization of average profit, means we have to capitalize that profit that are calculated on first part, and the formula is average profit multiply 100 divide rate of returns. It means that you have calculated that value of capital that is required to earn this profit. Okay, so you have calculated the capitalized value of average profit. And the third term that will be given to you in the question, the actual capital invested. So the third thing is calculation of goodwill. The formula is capital required, means that you have calculated by capitalizing the average profits minus capital employed. This is given in the question. We will more clear this question, this method, by solving the question. You may see that there's a question. Let's solve this. A business has earned an average profit of rupees 30,000. The average profit means per year the profit, the rate of the profit that we earned per year, average profit, that is 30,000. And normal rate of return is 10%. In similar type of businesses, 10%. Normally the other business that operate in the same things, same kinds of business, they earn the profits at the rate of 10%. Find the goodwill by capitalization method, assuming that business owns assets rupees 3 lakh and liabilities rupees 50,000. Okay, see. First of all, we will have to capitalize our average profit, and no need to calculate the average profit now because they are already given in the question, 30,000. Okay, so capital employed is equal to total assets minus liabilities. This is the actual capital employed that is invested in our business. Total assets are rupees 3 lakh minus liabilities that are given 50,000. So the capital invested in our business is rupees 2 lakh 50,000. Now we have to capitalize the average profit, means we have to calculate that amount of goodwill that is needed to earn the average profit of rupees 30,000. So you can see that 30,000 multiply 100 by 10. This is the normal rate of return. We are using the formula of capitalization of average profit. So you can see that the capitalized value of average profit, yeah, you can say that normal capital employed is rupees 3 lakh, and the actual capital employed you have seen there, yes, this is 2 lakh 50. So the difference between the both, that is 50,000. This is your goodwill. Okay, so I hope you understand this method. The first method, capitalization of average profit method. Now we will see the second method, that is capitalization of super profit method. We will learn how goodwill can be calculated by using this method. According to this method, goodwill is calculated by capitalizing the super profit. It's very easy. First of all, we need to calculate super profit, then capitalize that profit. This is the goodwill. Okay, so what are the things that are needed to calculate? First of all, average profit. As I told you yesterday also, that to calculate super profit, two profits are required. First is average profit, second is normal profit. So the things, if they are given directly, then no need to calculate. If they are not given, then you will have to calculate, and the formula is the same: average profit divide by number of total profits divide number of years. And normal profits, how will you calculate normal profits? Capital employed multiply normal rate of return divide by 100. It is also easy. The third is super profit. Super profit is the difference between actual average minus normal, means what we have actually earned and normally the other firms earn. The difference between the both is the super profit. Okay, now the goodwill will be calculated by using this formula. Which formula? Capitalization of super profit method. Goodwill is equal to super profit, which we have calculated in the point third, multiply 100 by rate of return. This will be your goodwill. Okay, I think you all are getting the formulas. So let's take another question to make it more clear. A firm's 4-year profits are 16,000, 20,000, 24,000, and 32,000 respectively. These are the profits of 4 years. So we will have to calculate the average profit now. Okay. The capital invested by the firm rupees 1 lakh. The capital invested by the firm, this is the actual capital that is given. Okay. Fair of return on investment is 18%. This is the normal rate of returns, means the other firms earn the profits at the rate of 18% per annum on their capital employed. Compute the goodwill based on 3 years purchase of average super profit method of last 4 years. Means we will have to calculate the goodwill by using two methods in this question. First is simple super profit method, and second capitalization method. We will discuss both separately. Okay, in solution you can see that there is no average profit is given in the question, so you will have to calculate the total profits. They are 92,000. Divide 92,000 by 4 because these are the profits of 4 year. Normal profit, capital employed multiply normal rate divided by 100, and the capital employed is 1 lakh, that is given in the question. Rate of return is 18%, so the normal profit will be 18,000. And the super profit, this is the difference between actual profit minus normal profit. This is 5,000. Now you can see that we have calculated goodwill by two methods. First is capitalization of super profit, and second is simple super profit methods that we have discussed this method already. So firstly we will capitalize the super profit method. We have calculated now 5,000. We have calculated, we will capitalize that profit. This is the amount of goodwill only. 27,778 will be the amount of goodwill. And the other method that we have discussed yesterday also, but I have solved the question by this method also, because in the statement we saw that the three number of year purchase were given, so we will multiply the super profit by 3, and 15,000 will be the value of goodwill. Here one thing is, you will have to note it that the good amount of goodwill by using these formula will be different. You can't say that the goodwill amount of goodwill will be same. No, it will be different. In the same, in this formula you can see that goodwill is 27,078. In this formula you can see that goodwill is 15,000. So it is not compulsory that good amount of goodwill will be same.